Your credit score controls more of your life than you think. It decides if you get that apartment, if you get that car loan, even what interest rate you pay on your credit card. But here's what's wild. Most Americans have no idea how it actually works. By the end of this video, you will. And you'll know exactly how to raise yours fast. Welcome to Money Made Simple, where we break down US money topics in plain English. No jargon, no fluff, just the stuff that actually matters. If you're new here, hit that subscribe button so you don't miss the next one. Now let's get into it. So what is a credit score? Really? It's just a number. A 3-digit number between 300 and 850. That's it. But that number tells banks, landlords, and lenders one simple thing: how risky it is to lend you money. The higher your score, the safer you look. The safer you look, the cheaper everything becomes for you. Here's the wild part most people don't realize. The score is built by 3 big companies: Equifax, Experian, and TransUnion. They're called credit bureaus, and each one might give you a slightly different score. That's normal. They all use a system called FICO. About 90% of US lenders use your FICO score to decide your fate. Now here's the part nobody teaches you in school. Your credit score is built from 5 things, and they don't count equally. Let me break them down from most important to least. Number 1, payment history. This is 35% of your score. The biggest piece. It's simple. Do you pay your bills on time? Even one missed payment can drop your score by 50 to 100 points. So if you do nothing else after this video, set up autopay. Just the minimum. It saves your score. Number 2, credit utilization. That's 30% of your score. Big word, simple idea. It's just how much of your credit limit you're using. If your card has a $1,000 limit and you owe $900, that's 90% utilization. Bad. You want to stay under 30%. Under 10% is even better. So on that same $1,000 card, keep your balance under $300. Number 3, length of credit history. 15% of your score. The longer your accounts have been open, the better. This is why you should almost never close your oldest credit card, even if you don't use it. Keep it open. Let it age like a fine wine. Number 4, credit mix. 10% of your score. Lenders like to see you can handle different types of credit. A credit card here, a car loan there, maybe a student loan. Don't open accounts just for this, but know it matters a little. Number 5, new credit. The last 10%. Every time you apply for new credit, it creates what's called a hard inquiry. Too many in a short time looks desperate. Lenders don't like desperate. Space out your applications by at least 6 months. Okay, so now you know what builds the score, but what's actually a good score? Here's the breakdown. 300 to 579. Poor, you'll struggle to get approved for almost anything. And if you do, the interest rates will crush you. 580 to 669. Fair, you can get approved, but you're paying a premium. A car loan that costs someone else 6% might cost you 14%. 670 to 739. Good, this is where most Americans sit. You'll get approved for most things at decent rates. 740 to 799. Very good, now lenders are competing for you. Better rates, better cards, better offers in your mailbox. 800 to 850. Exceptional, you're the dream customer. You get the lowest rates on everything. Less than 25% of Americans hit this range. Now the question you really came here for. How do you actually raise your score? Here are 5 moves that work fast. 1. Set up autopay on every account, even just the minimum. Late payments are the single biggest killer of credit scores. 2. Pay your credit card balance down before the statement closes. Not just before the due date, before the statement date, because that's the balance that gets reported to the credit bureaus. 3. Ask for a credit limit increase. If your limit goes up but your spending stays the same, your utilization drops. Instant score boost. Call your card company. They say yes more often than you'd think. 4. Check your credit report for errors. Go to annualcreditreport.com. It's free. It's the only government-approved site. About 1 in 3 reports has an error. Fixing one mistake can add 30 to 50 points. 5. Stop applying for new credit for at least 6 months. Every application drops your score by a few points. Let it rest. Let it grow. So to recap, your credit score is a number from 300 to 850. It's built from 5 things, with payment history and credit utilization being the biggest. To raise it, set up autopay, pay before the statement closes, ask for limit increases, check your report for errors, and stop applying for new credit. Simple moves, big results. Now I want to hear from you in the comments. What's the biggest credit score mistake you've made? Drop it below. I read every single one. And if this video helped you, hit that subscribe button. Next video I'm breaking down term versus whole life insurance and why most Americans pick the wrong one. See you there.